when we run above an old high known as buy side liquidity, this area is where traders like to short. Now, this is a very wide concept in ICT. It's called liquidity grab, liquidity raid, anything you want to call it. But then, what makes turtle soup itself different from the normal liquidity grab and whatever is that other models will tell you to look for a market structure shift on the lower time frame before you get in. Okay, before you get in. But in turtle soup, you're not looking for confirmation, you're getting in that trade just like that. That's the difference, and that's why turtle soup is unique. So now in this video, I'm going to show you, okay, how you can take turtle soup from here. Look at how risky this looks, because this just break a high. It could continue going up, or you might enter this, hit your stop loss and go down. So it's kind of very risky. That's why many traders are scared of it. So that fear, how to eliminate that fear, and what other confirmations you're going to know, they're going to use to know if this will reverse after running this video. So now let's get straight into it. Now, turtle soup should not be used on its own. Turtle soup should not be used on its own. Why? Because it's not strong enough. The only way you use turtle soup is on lower time frames when everything is aligned. So now I'm going to give you a proper example. So when we are trying to look for our draw on liquidity, let's say in an instance whereby this is our 4-hour dealing range, okay, this is our 4-hour dealing range, which you can also call 4-hour structure, and we are bearish. And then the idea is that we have had an established 4-hour low, so we want to trade back into internal range liquidity, more like fair value gap or order block or any point of interest that is above here. That is the next draw. Now, based on what I've thought, for you to verify this to be the draw, this POI have to be visible on not just the 4 hours. 4 hours, 1 hour 15. There must be something in this zone open enough, unmitigated, that will drop price. So now you have come to your trading time. Your trading time has started. London Q zone, for instance. So I'll use vertical lines to show you the boundaries. Let's say London Q zone just resumed, right? What you want to do is to go to the 1 hour chart and try to trade off a POI that is below midnight open. So midnight open is another factor. So I would name this midnight open. Midnight open is another very serious factor. So you want to choose the POI on the 1 hour time frame you want to work with must be below the midnight open, because the draw is higher, so you want it to go below. So if price goes inside, let's say an FVG, which is the POI, on the 1 hour chart specifically, under the midnight open, do you know what the next thing to do? Now this is when you would go on 15 minutes time frame and refine this FVG. Let it suit another 15 minutes FVG to make it more precise. Now, do you know the last step? You have to go to the 5 minutes time frame and now look for the turtle soup I'm going to teach you today. Something like this. Run and then takes off. And you want to enter at that point where it ran through a week and leave your stop loss and take the trade. That's the best use of turtle soup. This is the best use of turtle soup. Any other use is more risky than you think. So now, this use of turtle soup is not just like this. You can't just use it like this. There's some guiding principles, things you must do to avoid losses, things you must do to know when the turtle soup will not work. So now we'll learn that on a real life chart, but this is just like an example, like the skeletal picture. So let's go to real life chart. I'll show you an example on Euro Australian dollar. Now this is Euro AUD, okay? So I'm going to give you this very simple example. Now I'm on the daily chart. So if you peep on the weekly chart to see what's happening, let's start from that. Now if you watch how I trade, I like marking my structures clearly. As you can see, we are in an uptrend on the weekly chart. If you want to verify, you can start marking it from, since high, higher low, higher high, higher low, higher high. So the most recent higher low and higher high is what I call dealing range. Okay, so it means we are sitting in this dealing range, right? So the same thing that ICT traders call ERL taking out, so price will trade back inside the range or trade to the next ERL. I don't want to use those terms so it doesn't get too complicated for new traders, but this is a higher low, a higher high, and we're in this range. So what do we do next? We know that in this idea we have been invalidating all the bullish PD arrays. Okay, even this FVG has been filled before and price has filled it the second time here, so it's clear that okay, here wants to get covered. Probably price wants to dip its way to this other block. It's possible. My definition of order block is the smallest candle before the word push to the upside. That's my definition. Okay, so it's not the same for every trader, and that's fine, but I have the way I view my own stuff. So now what do we do next? We break down to the daily time frame to see opportunities for recent price action. So what are we on daily time frame? An uptrend that flips bearish at this point. Do you see that? So we just broke this previous daily low, what some people call ERL. We just broke it. So now, if you don't know how to use ERL and IRL kind of logic, the thing is that as you break here, you'll be thinking of reversing. But like I told you in my last video about ERL and IRL, that's not how it works. The only reversal would work when on the 4-hour price has changed character to bullish. That's when a reversal will most likely happen. If it does not happen, then price will keep going down, following the 4-hour smaller structures downtrend. That's what's happening now. There's no sign of price ever reversing. Coupled with the fact that I told you there's a possibility that price drops here. You see this area I marked? That's exactly a fair value gap here. So most likely will come there. So now what do? We break to the 4 hours so that we can know exactly what the market is doing. So on the 4-hour chart, what do we see? So watch the 4-hour structure: low, high, low, high. We've got it a low here. So now we have been able to retrace back to what? ERL, which is what order block, and it's refined down to the 1 hour. That's why it's solid. That tried to trade away from there, because it has been refined to this other block here, and we also refine it even smaller to what, 15 minutes, and that's why it's this small and is well more suited in 15 minutes time frame. So what does that teach you? That okay, we have retraced. It means that here is a powerful area and it's capable of pushing price towards continue the downtrend to this next 4-hour low. That is the ideal meaning. Okay, so in this case, what do we want to do? We are bearish. Bias is bearish. All this time frame supported bearishness. So now how do we get our entry? Now this is where turtle soup comes in. Okay, not exactly here, but from here you start considering the use of that. Now we have to drop. So first of all, we'll find our midnight. I'm using BTC -4. Okay, so New York time, BTC -4. So this is where we'll get our midnight from. We don't have our midnight yet. A midnight candle. So and these are midnight candle. So it's a bullish candle. So we're going to mark the low of the bullish candle. Okay, and that's gonna be our midnight. I'll make it blue and I'll make it thicker so it can stand out, right? So what does this mean? It means any POI you're going to work with on the 1 hour, any bearish point of interest you're going to work with, will be above the midnight. That's just it. That's why it's marked. Should be above, so it gives you more confidence. Now, what are the POIs we have here? We have this high here. Now, I've taught liquidity on this channel. Now, the thing is this: we have liquidity pools as either, let me write it here. We have liquidity, important special liquidity pools. Okay, these are the kind of pools that you need to use when you're working with turtle soup. So we have PDH, previous day high and previous day low. Of course, there's always the other version. We have Asian high and Asian low. Of course, we have London high and London lows. We have New York high and New York low. We have high of the day and low of the day. We have previous week high and previous week low. What again? We have previous high and previous low. Now, all of these liquidity pools, the only one that I don't want you to work with is the last one, previous high and previous low. Reason is because it's very random. Any high or low can be previous from where you are at the moment. So you don't want to use this. But see any of these other ones listed here, they are very important. Okay, one, two, all of them listed here, they are all very important when using turtle soup. Meaning, if you must use turtle soup, the liquidity area has to be special. Okay, has to be special. So watch me right now. So this is an Asian high, so it's a special liquidity pool. All you want is for 1 hour candle to first get there, and once the 1 hour candle gets there, you jump to the 15 minutes first to make sure you're seeing this candle reaction around there. It's an important area, so your confidence should be high. Bias bearish, what they call it, we are above midnight, we are very premium, and also Asian high, important place. So there should be no fear in any way. Okay, so we have our position. Our position should be kept here now. Why? When are we going to keep our position there? Immediately we see this first week. Whenever as you just see this 5 minutes candle run here and close here, I know it's hard to trust, but because of all these confluences, it makes sense to do this. So mainly the first candle close with a sharp wick like this, you enter at the close of that candle. As long as it does not close above, you enter with it on the 5 minute chart. Now, how are you going to put your stop loss? Now, this is where you have to be smart and discretionary, in the sense that you want to look at the left side where there is any POI that price might chase to drop. Example, there is something like this order block. I want to keep my stop loss above instead of here. I want to give it that breathing space because this could cause problems. But I'm not going to start extending it too far because there are so many. But the closest POI around, I want to keep my stop loss above it just in case of more push, because most times more push happen. Now, where is my TP going to be? Normally, you're supposed to take profit at Asian low, which is going to give us a 4R. But you have to be careful that sometimes price might not just drop or might reverse or whatever. So I like using a fixed RR 2.5 or 3, depends on how it is. And that's how you cash out from this. Easy and fast. Now, this actually kept dropping, but like I said, let's look at another use of turtle soup. Now, see this particular way, even if it's previous day high, if it's, I'm not saying you start seeking previous day high. Listen, it must align with other things, and if the only POI around where price has to drop from its previous day high on the 1 hour, then the turtle soup on the 5 minutes at that point makes sense. Also, if you're in a bullish scenario, previous day low will work, Asian low will work, but it must be, if for a bullish day, it must be below midnight, and it must happen on the 1 hour time frame first. That low must be clear on the 1 hour time frame first. So now I want to give you another instance how this can be used. Okay, so now another instance how you can use turtle soup is if the POI you're working with on the 1 hour is not a buy side liquidity. Asian high is a type of buy side liquidity, Asian low is a type of sell side liquidity. Okay, so if it's an FG, the POI you're going to be working with on the 1 hour chart that is above midnight in a bearish scenario, let's assume this is midnight. Okay, and what you're going to be working with is a fair value gap. Now, what should you do? Now, it's simple. When price gets into that fair value gap, what happens? On the 15 minutes, price has to be what? Refined, right? But on the 5 minutes, it must be a sweep. Do you hear me? It must be a sweep. So now you know that this is a very good area and has been refined on the 15 minutes. Now, if there is no little high here that price has to run on the 5 minutes, if there's no something like this around here that price has to run on the 5 minutes inside that box, don't panic. Okay, you have to find it again as price keeps delivering lower. So the first option is if price runs this high on the 5 minutes, fine and good, and throws a wick, yes, you enter. Okay, that's smart. That's the first option. And give your stop loss breathing space. That's the first option. But if it does not happen, probably on the 5 minutes is also an FVG around here, there's nothing to run, then what should you do? As price keeps dropping lower, it will engineer liquidity and take out something. It will definitely do that. And when it takes out something, that's where you want to enter. Okay, that's where you want to enter. Okay, so watch me. You enter this way, and stop loss is going to be above. That's exactly how you want to enter. So guys, let's see a chart example for this. I'll be able to show you two chart examples that you use to learn this. Okay, so the first one is Euro AUD, this same day but the New York session. So London session is over. New York Q zone starts by 7 a.m. Eastern time, which is 12 p.m. Nigerian time. So the same principles, we are still bearish. Major draw on liquidity has not been met, so price has to drop lower. So what do? Once it's New York, we want price to get into that into that 1 hour POI that is above midnight. Okay, if price doesn't do that thing from 7 till 8:30 Eastern time, which is from 12 p.m. Nigerian time till 1:30 p.m. If price does not enter a 1 hour POI above midnight, then your next power 3 stuff will not be midnight. It's going to be the 1:30 p.m. open, which is 8:30 a.m. Eastern time open. That's going to be your new one. You're going to ditch this one. If price goes above this, you enter a POI, you work with it. Okay, that's what you're going to do. But please, if London session, the price has not gone above midnight in London session already, don't do this. So it won't work. Meaning price will still chase midnight and scatter your stop loss. If you use 1:30, you only use this 1:30 if in the London, yes, price has gone above it and enter POI and drop, just like this. Okay, it's acceptable. This 1:30 now is going to be acceptable. If you've waited from 12 p.m. to 1:30 p.m. Nigerian time, no setup, while you're still waiting before your Q zone ends, you can work with this. Okay, 1:30 opening price, you can work with that. But let's see in this case. So let's continue. So like as I was saying, now it's not yet time. It's supposed to be 7 a.m. Eastern time before we take this trade. Okay, now it's 7 a.m. Eastern time. We had this drop. This is our midnight. Don't mind this thing. This thing happened by 6 a.m. Eastern time. It's not part of it. So now we have a what point of interest here, other block, right? So now let's see if price would do this. Now watch. What time is it? 9 a.m. Eastern time, which is around 2 in Nigeria. So it means 1:30 has passed. 8:30 Eastern time has passed. So what do? We need to look for that 8:30 open. So where is 8:30 open? Here. Look at it here. So now we have seen where it is and we are sure above it. Makes sense. So any 1 hour POI that is above it will work out for us. We don't have to be scared of it, right? So we are in this 1 hour fair value gap here. Fair enough. So if we refine it to 15 minutes chart, we are in this particular place. We ran a high. So we'll make that slim enough. We ran this high on 15. That's impressive. We'll see price reacting at that place. Like, the candle is still for me. That's impressive. All you want to do is stay in the 5 minutes. The first candle that closes, a 5-minute candle that closes after throwing wick here, after leaving a pin bar, is what you want to work with. And where you're going to get your stop loss. Now see, we have this other block here. A wise man will keep his stop loss above it, so that you don't get affected, right? Where is your TP going to be? So 2.5. It's okay. So that's how you're going to enter, right? So you see this pattern of tortoise. Let's see if that's going to be TP. Price there ranging stupidly. Let's play it from 5 minutes, 15 minutes, so I can get there really fast. All right, so that got hit, right? Now I want to show you another instance. If along the line, maybe as price entered this fair value gap on the 1 hour and 15 minutes, and then on the 5 minutes there was nothing around here to run. Here was plain gap. Do you know what to do? Don't force this. Still wait till there is a run on liquidity under 5 minutes. Now, when I mean run, network is stopping me. When I mean run on liquidity on that 5 minutes, when I mean run on liquidity on that 5 minutes, trust me, it should be an actual high you're working with. Please don't just go and choose any candle week. Example, I see some of you do something like this. That okay, this is a high. No, that's not a liquidity sweep. I won't consider it as a high. This can easily fail. You want something that is a proper high. A proper high. How is a proper high? How does it look? Candle here, candle here, candle here. This is a proper high. It's made the curve. It made the what? The V-shaped curve. Like this. Sorry. This formation. I don't mean just random candle wicks. So this formation, see it's here, candle, high, and this is a proper high. So this is where you can still take that fucking damn trade if you don't have something like this. So after this candle close like this, though it looks scary, but trust me, go and back test. It works. So we're gonna put your stops above. Why? You have rejection block here and all that. You just want to keep it here. Okay? Here 2.5 R. It will give you more RR than somebody, you know. So this is exactly how turtle soup can be used. All right, so another perfect example is this for buys. I think USD card is the best to do this example. So I won't go much into daily buyers and the rest. You can watch other videos for that. But based on the turtle soup idea, so this is an established 4-hour high. So I'll make it green because it led to 15-minute chops, obviously. So this is an established what 4-hour low. So you can see that price all because why is it a 4-hour low? Because it led to a break of this old 4-hour high, which you can see here. So now price just came to take it out, which to me makes it flip bearish. But this is my logic. When the market flip bearish on the 4-hour, this high will turn to red, which is a daily structure high. That's how I do my stuff, right? Then these 4 hours we see here, two things will happen. Now whenever price breaks structure a week, two things normally happen. Either price reacts to an FVG and drop from there, or price run another buy side liquidity to come lower. If it was go lower, it won't work with an order block or anything else, either FVG or this. Okay, so that's why I saw how this FVG has mitigated before, and whenever FVG has mitigated before, the next return is always going to be to cover it, and you're already seeing the action here. So with New York session, let's see how now we know that our draw is higher because this one has been this FVG is useless. So now we'll wait till is New York so that we'll know we'll trade towards it. So we'll first of all find our midnight. Where's our midnight? Our midnight is here. That's our midnight. So we'll make this blue. So that's our midnight. So right now, as you can see, we have this low here. Okay, we have this low here, right? Have this low here, and what happens at the end of the day is that this low is an Asian low. Okay, so if price on the 1 hour gets to that point under the midnight in these conditions, then a bullish trade is a very smart idea. If this kind of thing happen, honestly speaking, extremely smart idea. So watch now. As the 1 hour candle came here, what should you be doing? You should be watching these things from the 15. Look at how it is while it's still, pushing up and down right here. You want to spot when it's a 5 minutes sweep that the candle closes back inside your range. That is enough confidence for you to buy now because this is a powerful liquidity pool. So you take that trade here because that trade is going to close here. Rather, it's a bearish candle. Sorry, a bearish candle, so it's most likely close down. So you want to give your stop loss breathing space, maybe below this low or something, just to make it have more breathing space. And then your take profits can target this high or whatever, or our normal 2.5 R. Okay, now just for experience sake, you might have this happen to you. Okay, it hits and run. So when you're taking this trade, you must not put your stop loss too big. You might put it and it might hit you, and that's fine. If it hits you, what should you do next? Take a look at the area you're marking out again, where you are. Check on the 15, check on the 1 hour. You find out that price is still reacting. So I can take a second entry when this candle that hits me has closed, as long as it's still closed below this low here. That's another sweep of liquidity. Okay, because price chasing to come sweep this low, it's normal, right? It happens. So I would enter here again and put my stops lower, okay, just in case, and target my 2.5 R. Okay, so I just to show you, yes, you might get stop hunted, but then if you see another criteria to go long, go long. If you hit your trade as a loss the second time, then one thing is most likely possible. One, you failed your draw. So the idea is not being scared of turtle soup. The idea is your draw and everything is on point. Yes, even if turtle soup wants to do nonsense, like wants to make you lose a trade or something, in your second try, it will most likely work out, because all it's seeking is just maybe more liquidity. After seeking it, even if it's not enough, you can seek another one. But as long as it's got closed the week above where it ran, then you can give it a second try. See you guys in the next video. Comment your thoughts, your questions in the comment section. To join the academy for proper tutorials on ICT concepts, you click on the link in the description. I'll lead you to my WhatsApp DM or my Telegram DM. See you in the next video.